let's hop straight into it. So, as promised, I will not be trading tomorrow. So today, I didn't take two full losses. I took a full loss and an early exit loss. Um, I was actually done pretty early today. I got done at like 8:53. The news came out and kind of just went against me, and it made me want to look at this week in general. At the end of the day, my whole trading plan, a lot of my trading plan was meant to almost fully eliminate full losses from my trading plan. So being a better loser. I know it sounds crazy, but in trading, the best loser wins. So I was like, man, I took so many losses this week and so many of them were full losses. So pretty much once I finished around 8:50, I just been going back through this week, looking and analyzing, not just marking up the trades I took and saying, okay, these are high probability trades, but actually going through them and saying, okay, I understand what happened. I understand this is a high probability trade, but what was available there that could have helped me become a better loser? What would have allowed me to take a early loss versus taking this full loss? And I come to find a lot of things through that back testing. That's why I say, I mean, anytime you're struggling, having a hard time in the market, if you're executing your edge and hitting, I'm not going to say don't study, but I'm going to say you're less likely to study because what you're doing is working. But when you encounter a rough patch with your edge, don't go and immediately try to change it. Analyze what you're doing. Because what worked last week with your edge might need a little bit of tweaking this week so that you can see similar results. And next week, that's why when you look at so many different traders, it throws you off because it looks like one week they're doing this, but then they're implementing this week. And it's like that's not the case. They just see in the market enough times to know, okay, in this situation, I need to be paying more attention to this. In this situation, I need to be paying more attention to that. They have so many tools in their belt and they understand how to pull them out when they need them. So, I mean, I'm not going to dig deep into all the things that I found, but I definitely found some really good things. Going back and looking, it was a whole lot of things that I don't want to say I missed, but like they say in the book Trading in the Zone, I just didn't have awareness of. Because again, my strategy had been working for me well enough to where I didn't need to sit down and say, okay, let me take a look at the losses I'm taking. How could I have been a better loser and lost less instead of taking normal losses over and over and over again? This is the first time I've hit a losing slump in these videos that I've been making to where I really need to sit down and analyze and say, okay, is my edge really on a losing streak? Or is it the way that I'm utilizing my edge that's on a losing streak? Is there little things that I need to be paying attention to get the most out of my edge? And 9 times out of 10, it is. Trading is a learning journey. You don't just figure out one thing and now you just trade forever. You never learn nothing. You don't have to do nothing. Like there's going to be moments where that one thing that was working, even if it was working for an extended period of time, just starts to not work, and you got to analyze deeper into it to see what about it's not working. What about it is not working? What about the market is happening to where my edge isn't working anymore? How can I use those things that I'm seeing to help me add to my tool belt, help me to be a better loser, help me to take better advantage of the wins that I'm getting and seeing, and just continue pushing from there. So I'm gonna go ahead and hop into today's session. So today's session literally just picks up from where my back testing was, because I literally just finished back testing the rest of the week. And again, I will not be trading tomorrow, but I will probably still go ahead and hop on here, make my video, to see what I would have done had I been here in the market. Um, had to drink some water real quick. And then go from there. And we basically gonna go from there. So let's go ahead and start. So we're on the 3 hour. What we see is these two 3 hour open zones are still there, still pushing, still open. We had a pullback here and price pushed, creating a high. It pushed here and then it gave us another wick, didn't close, and this one did close, and then it solidified the high here. So what we see is this is our new 3 hour high, and this is our 3 hour demand zone. Want to make sure it falls within the 50% level. It does. That's great. And yeah, just identifying it. Boom, 3 hour. So we see the 3 hour is in a retrace. So on the 1 hour, we want to focus on this downward push to see if we have any broken structure. If not, we're going to find the last lower high that was broken. So we go down to the 1 hour. Let's look. We're going to simulate it a little bit to get to 7 o'clock. All right, so we're looking at this down push. There was no lows formed that were broken. So what we want to do is find the last high that was broken. So the last high that was broken was right here. So price pulled back to here, pushed up, and that means this was the low that was broken. And it's a low probability too, because it broke here. This was the only candle, and it never closed below. So we'll mark this off as our 1 hour. And we know it's low probability. So we see that price impulse to the downside, and now it's retracing to the upside. So on the 10-minute, we want to focus on this upside retracement. So we go to the 10-minute. And now what we want to do is give it a couple candles to match the time I got here. So remember, yes, 10-minute is currently, we'll go back just to show. So actually, yeah, 10-minute is retracing to the upside. So we want to focus on this upside movement. And now it looks like it's pulling to the downside. So on the 10-minute, we want to evaluate it from this upside trend. So what we want to do is look here. So this was the high, the last high that was broken in that direction. So this high was here. You can draw it on. And the reason I say we want to analyze this versus analyzing this is because the retracement just started. If the retracement had started all the way back here somewhere, then I would just focus on what it's doing currently. But the retracement just started. It hasn't broken the low. This could literally just be a retest of something. So that's why we're going to start with the 10-minute from all the way at the beginning of the retracement, so that we have the most accurate structure and everything. So looking here, if we pull this down right on the tip, we see this one actually was a break. So we have a new high here. Price then retraced again, creating a low here. Pushed up, pushed up, pushed up, creating a high probability 10-minute, which we don't have to draw this zone because we've seen that it was broken. So it was broken here and closed. So this 10-minute is now downtrending, and it's a low probability downtrending. So now my focus is price solidified. This is a retracement. So now price is in a retracement. So on the 5-minute, I'm focused on this uptrending retracement. So on the 5-minute, looking at this retracement, there's no highs that were broken. Yeah, there's no highs that were really broken here. Price is just pushed and pushed. I mean, technically we consider this a high that's broken, right? Because this was a high and then price retraced and it broke. So we do have a upside low probability 5-minute push. So we right here, this was the high, was pulled back, and then it broke it. So we are actually about right here. So now we want to go to the 2-minute. So price pushed to the upside. It's in a retracement on the 2-minute. It should be. So we go to the 2-minute, and there's really no structure, downside or upside. So for me, I would just go back to the 5-minute, give it a chance to either push some more or to the downside, What does it do? Push to the downside. So I'm going to go ahead and follow structure from there. So we got a break here. We got a second break here. Third break here. We just looking for the retrace to start. Another push. Boom. And so now we have this high probability area. Right here is a sell. And the reason we still would use it is because it's outside of this zone. If it was inside of that zone, we'd only be looking for buys. So now we just want to pull it back just a little. And we could look at the 10, but the 10 hasn't really done anything, so we're going to focus on the 5. So we're looking for a retrace and retest. So we get a test up in here. We do get a rejection here. So we'll look to enter a little bit low. So we have 7.5, which means we would be looking for about, what, 15.5? Well, no, 8.5, so that means we'll be looking for 17.5. So let's see if we entered. Boom. We are definitely entered into here. So let's go ahead and find our 75% level. So 17.5 times 0.75. So 13.1. And so just so you guys know, I'm analyzing this from utilizing the new things that I found and being a better trader, not what I actually did. Now, this trade was actually the second trade I took. I'll go ahead and say that this was the second trade I took. The first trade was this one right here because I analyzed this as a supply, got in on here, and then this was my second scale-in trade, and I got in there, and I ended up taking losses. But I'm going to analyze this from the perspective that I should have been looking at the market at with the new things that I found in my back testing that I was doing before I got on here to do this video. Because at the end of the day, we all just trying to grow, man. We all growing. It ain't no need of me to keep looking at the market from a way that I know wasn't working. Let me show you guys the ways that I'm utilizing the things I do now. It's not, my edge hasn't changed. It's pretty much the same. It's just the way I manage it and take care of my trades that is different. And you'll see that. So we got this push right here. We can get rid of the 10-minute because we know we're following off the 5. So we got this push right here. We want to go to the 2-minute and see if we have any structure broken in that direction that we can use. So boom, boom, boom. We see there's no structure here broken. So we want to look for the last bit of structure that was broken. So we have a high here, never was broken. What was the last thing that was broken? This was broken here. This was the low. So this low was actually a 2-minute low that was broken. So we understand now this up here, it's 2-minute high. And let's see if it gives a high probability push or it retraces immediately. Immediately retraces. And solidifies the retrace. So now what I want to look for is I'm going to go to the 1-minute to see if there's any other areas here that I can protect my trade. Sorry, I went running yesterday in the cold and messed my voice up a little bit. So right here we see we have a low, and then we see price pull back, and then it pushed. Now it is low probability, but we're still going to mark it anyway. Make sure it don't die. Still going to mark it anyway just for the sake of understanding what's there, because we want to manage our trade the best way that we possibly can. So understanding that it's there. So now we can go to the 2 minute and watch and see what happens. So price actually ends up pushing lower. So we got to push here. Let's see if we get another high probability push. We do not. So what we see is price pull back on the 2 minute, making this the new 2 minute high, and then push down, making this the 2 minute low. Which means on the 1 minute, let's see what happened. On the 1 minute, price pulled back, making this the new 1 minute high, and push down. So the 1 minute and 2 minute structure match. So my new rule, or one new rule that I saw, because at the end of the day, anybody's goal, or I know for me, at least my goal in the market, is to protect the capital that I have at risk as best I can, because I never know how much the market is going to give me. I know I'm looking for a 1 to 2, and then that's where I'm satisfied with profit enough to consider that a winning trade. But the truth is, I never know which trades are going to give me a 1 to 2. I never know if they're going to give me, if they can potentially give me more than that. And I don't know if sometimes if they're just going to give me less than that. So the goal is to protect my trades, my capital, as much as possible. Now, it's a difference between protecting your trade and being scared. Being scared is anytime you see any type of profit, anytime you see any type of drawdown, you're just exiting because you don't want to take that chance fully. You haven't fully accepted the risk. Protecting my trade is I've accepted the risk, but now I'm going to manage it in a way of taking what the market gives me. If it gives me some profit and then gives me clear signs that it's not in my favor, I'm going to exit. I'm going to take what I know I have right now and then look to re-enter off a better opportunity or a different opportunity. So for me, one of the rules that I realized was, if you follow along, typically I only manage my trade with high probability movements on the 2 minute and the 1 minute, which a high probability would be a 2 candle push, which in this case, this is low probability on the 2 minute and the 1 minute because it only gave a 1 candle push, never broke below here. But my new rule is, if two low probability highs get broken in the opposite direction of my trade, then I will go ahead and exit. So if that makes sense, so basically, like we just identified, this is the 2 minute high, low probability. This is also the 1 minute high, low probability. So if this gets broken and closed past, I'm going to exit. Versus in the past, or in this session, what I actually did was hold through it because it wasn't high probability. And I realized that was something that was making me take more full losses than I needed to. I would have had more early exits, um, positive or negative. Either one of them is better than taking a full loss. Had I been a little bit more strategic about the way that I cut my losses. So in this case, I would have looked on the 2 minute and waited. So I seen this came. I understand this is the 2 minute and 1 minute. And guess what price did? Broke and closed above here. So guess what that means? That means I'm out. So I go ahead and cut this first trade for a small win here. So this is the first trade. Now, in actuality, the trade ended up being a loser. Like I said, I took 2 losses today, but managing it the way that I am going to be managing it from this point forward, I would have took a small win on this one, and then we would have cleared the charts to go ahead and set up for our next opportunity. So let's see what the next opportunity would have been, because after this, I was already done for the day. So I'm not even sure what the next opportunity would be or if it presented one. So we know we're in this 3 hour demand zone currently. So what we want to do is go to the 5 minute and see if structure broke here. So here we see 5 minute structure broke to the downside, low probability, gave us this high. We understand that this zone has been tested once, so if I'm going to get in a trade on this one, I need to see it test a little higher than it did the last time. So it tested all the way up here. I need to see it test further in there for me to get in a second trade off of this. But because it's low probability, we see an impulse to the downside. It's pushing off of a high time frame zone to the upside. So now let's go to the 2 minute, focusing on this upside push. So what I see is there is no uptrending structure that has been broken yet, but we do know this high has just been broken. So guess what I could do? I can draw this on. I understand that this high has been broken. This is a 2 minute zone. And now let's see where this 2 minute ends off. So it's still pushing, still pushing. Boom. Retraces into this 2 minute zone. Now what I have to do is make sure that it is a 50% pullback at least, which it's close enough to where I would count it. And now I'm looking for a entry confirmation down here. So let's see if we get one. Nope. So we get a bit of an entry confirmation here, but this was right at 8:30 where the news went crazy. So I wouldn't have got in there. But what did we get off of here? We got a test. We got a 5 minute push. But the reason I wouldn't have got in here is because if this push would have been a smaller candle, I would have went ahead and hopped in. Because this push was so large and it pushed all the way into the 3 hour, I want no parts of this. I want to just wait for the news to calm down. Because I was in here through the news and the spreads got crazy. And this is where I got stopped out. So now I'm just waiting. I'm going to leave this 2 minute zone here though. So what do we see? Price pulled down. So we see the 5 minute is still low probability because it didn't break the high or the low. But on the 2 minute, what do I see? I see that this low wasn't broken, but this high was broken. So what did that do? That created a new push. So again, we could leave this zone down here as an open zone to be tested, but we know this is the new high now. And it's low probability. But this zone is still high probability. Boom, we get a nice test. Now we get a much cleaner test. Now typically I want to see it test deeper in there, but this one tested all the way through and then it gave us a wild news candle. So in this case, in this situation, I could have either entered off this news candle or I could have waited for this cleaner test and said, okay, the first test wasn't good. The second test, let me give it a shot if it can push past. So we would have did about I would have gave it a little bit room. So about a 5.5 pip stop loss. And looking for a 13.5 pip TP. So let's see if this trade would have been entered. Boom, this trade was entered. Let's get our 75%. So 13.5 times 0.75 is 10.12. So 10.1. Go ahead and draw this right there. And then go back to the 13.5 we're looking for. All right, so again, now we want to manage this. So price is pushing to the upside. We're expecting it to push to the upside. So what we need to go ahead and do is go to the 1 minute and see if there's any broken structure here. So there is a little bit of broken structure to the upside. There was a high here. Price pulled back to this low and then kept pushing. Now, I would love to see some better structure because this really doesn't give me much room to manage this trade. If price wicks below here, it's probably stopping me out anyway. So let's continue to go and see what's going on. So price is pushing, pushing, pushing. It wicked above my partial level, but it hasn't broken it. So let's see, because this is also a 5 minute zone. So let's see how price reacts. Well, price pushes straight through it, wicking my TP. So had we been looking at it from this state of view, we would have been able to leave with a W. Would have been able to leave this trade with the W, and yeah, it would have been a nice little 1 to 2. We would have had a small win and a W today. Instead, we ended it with a loss. But again, like I said, this is definitely you're gonna start seeing, if you follow along the videos and watch the videos from here on out, you're gonna see a more strategic way that I'm managing my trades. As far as the analysis part, the analysis is going to be the same. The only part about my analysis that I have refined, and I don't want to say changed because I've always focused in this way, but I now have it more well defined, is when price is impulsing or whatever phase the market is in, I'm focusing only on that phase to the upside or downside. So an example of that would be, let's go back a little bit. Oh no, we don't want to exit. Let's go back to right here, right? So once we got this candle solidifying that price was pushing to the upside, right? On the 2 minute, I don't care about what all of this did. I'm only focusing on this uptrend. But on once I get to the 2 minute, I see all it did was go up, 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 up. It never pulled back and broke a high. So what I want to do is now I will go to the next high or low that was broken. So this was the last high. It wasn't broken. This was the last low. It was broken. And so that's how I would do my zone. And then go from there, right? Until some type of structure is broken. Now, of course, that wasn't anything we used during our thing, but really, I just gave a more well-defined definition of what am I focusing on when I'm scaling down. Because what would happen is sometimes I would scale down the right way, and then sometimes I wouldn't. Like sometimes I would scale down, like I would go from the 1 hour here, like you see, the 1 hour is pushing to the downside, gave this impulse. And then instead of saying, okay, the 1 hour is in an impulse phase, let me analyze the 10 minute based off this impulse, I would have just focused on this downtrending structure of 10 minute. Now, in this case, it came out the exact same way, but I need to get more in the habit of analyzing the phase of the market. And so I don't think I've ever mentioned what the three phases of the market is. Well, really, it's kind of four, but if you ever look at market structure, there's really not that many phases of the market. The phases are impulse, which is the creation of a new high or low; retrace, where the new high or low has been solidified. Let me go to the 3 hour because it'll be easier to see on the higher time frame. So the different phases in market structure. You have impulse, where a new high or low is created. You have retrace, where it has been solidified and started to pull back. You have the testing, aka like consolidation, where price is now in this zone, is starting to consolidate, slow down. And then you have the continuation phase, which is where it slows down, and then it gives the big push off of here, creating a new high or low. Creating a new high in this case is what we're expecting, or it'll break through the zone, giving an impulse to the downside, creating a new low, aka reversal. So those are really the only 3/4 phases of market structure. So when I identify prices impulsing, I need to focus on the impulse on the next time frame down. When I identify the higher time frame is retracing, I need to focus on that retrace on the next time frame down. If I identify prices within the zone and it may be moving side to side, I need to be focused on that side to side movement on the next time frame down, looking for price to break out of it one way or another, to give me some type of opportunity. And if I identify that price has pushed, retraced, and is now looking to continue to the upside, I need to focus on that continuation move on the next time frame down. So top down analysis is looking at the higher time frame, identifying what phase it is in, and then going to the next time frame down and only focusing on that phase. Because at the end of the day, we're trying to trade what we see right now, not what price was doing on the 10 minute yesterday night. Um, so that was another little thing that I kind of refined, but for the most part, like my analysis is the same. My trade entries are the same. it had more to do with the way I was managing my trades because at the end of the day, this week was a big week for in losses for me because I took a whole lot of full losses. Now I'm not trying to avoid losing. I understand losses are going to happen. If I was going to take 8 losses this week, I'm gonna take 8 losses. But all 8 of them don't have to be full losses. I just have to dig deep enough and find ways that I can better manage my trades so that when I am losing, I'm finding opportunities where I can cut the losses earlier than I typically do. And again, I'm not perfect. I'm not a perfect trader by any means. I'm growing and I'm just putting my process one on YouTube to journal for myself so I can always go back, look at these videos, see where I was at any particular point in time by going back to the video of a particular day or date. But also just putting it out there in case anybody else finds this helpful, in case somebody's struggling through their journey, don't know what to do next, just to show that, you feel me? Like it ain't all wins, it ain't all good, it ain't even always I know what I'm doing. Sometimes I realize that, hey, my strategy can be a little better. But it's about you digging deep enough to say, let me not change my strategy. Let me just dig deeper into my strategy and see what can I tweak just a little bit. What can I add that might make me a little bit more profitable more times than not. And at the end of the day, it's all really trial and error. It's all really trial and error. Like I said in the beginning, your edge can be working perfectly fine this week, and next week you got to add a little something to it for it to work. And then the week after that, you don't need that little something no more, but it's now in your tool belt to be pulled out anytime you need it again. So I'm not trading tomorrow, but I probably will get on here just to show a back test video. Um, and then we'll be starting next week and just see what's going on. So I hope everybody has a great trading day tomorrow, and I will have a video on here tomorrow, but I will be live trading again come Monday.